The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday night here in Asia. Monday morning, we had a heck of a sell-off on Friday. Actually, after I went to bed Friday night and down here in Asia. That was kind of shaky times there on the S&Ps. Had a little bit of a rebound today, back up to 1900, went as low as 1880 when we opened up this morning, or excuse me, Sunday night there in the States would be some form of Sunday morning here, or Monday morning here. Here's the low we hit, about 1880, 1012. 1012 is the low point, and 1012 is the date. The low point's 1880, and then we had the unfair highs around 1900. Hitting the unfair lows around 1900 on our 60-minute. So I'm showing you our 60-minute profiles. 240-minute profiles. A little mixed up this morning. 240-minute profile lows here. I brought these up because we've reached an inflection point already, bouncing 20 S&Ps, and now we're kind of just hovering right around that area. That's the short-term landscape view. Here's the long-term to intermediate-term daily situation. Again, nothing really to key off of down here, and the market breadth, as we have generally looked at this for some form of guidance, is still very, very negative. Now, that's not saying that we're not going to have, rallies in the midst of a bear market, and the technical damage, in my opinion, has been solidified on the long-term weekly and the daily intermediate. So, again, we could churn around here, but I'm looking for help, if you will, and that help seemingly is around 1900. Cool thing is, for me, is 1900 is also that psychological numerical whole number, and also coincides with these inflection points under 240. 240s are a lot less relevant than the weekly and daily. So here's the weekly situation. Got that massive close below, well below, no new indications that we're going to have profiles down here. So, again, we could turn around down here, build cars, as Tom O'Brien says, but I'm leveraging shorts right now off of 1900, 1901. And in a down market, you always, well, I'm not clarifying this is a supreme down market right now, but in a down market or an up market, you always want to see, to continue the trend almost, you always want to see things gap up in a down market so it'll find more sellers and give them the hope that it's a chance to still get out of this thing. Not that this is, Katie bar the door, we're going to zero tomorrow, but as we look at this in an up market, when an up market, you want to try to, you want to see days that kind of gap down so it will find more buyers, and then that momentum will carry it north again. Same thing on the sell side on the as we have a downtrend. So, again, that's the picture on the S&Ps. Again, we're going to gap up this morning relative to Friday's close. We may find new sellers, and I think that 1900, 1901 area may be a ripe opportunity on the sell side still. Again, I'm basing this on, let's be on the right side of the market. The technical damage has been done on the bear side, and I'm going to stick with this trend until I'm told differently with these metrics here. Here's the situation with the NASDAQ. We rattled around, stayed below, closed right around a couple of times, just 40, 40, 27, and we are 100 NASDAQ points lower as of early this morning. Here's the situation on the 240 here. You've got a little bit higher target for an inflection point to key off of here. 3881 is the NASDAQ inflection point that I'm paying attention to. And that's going to be my sell signal there with stops oriented back into the fair auction based on my appetite for risk. Let's take a look at also something we don't take a look at very often, which is the Russell. And we've been basically talking about the Russell as the weaker of the indices. And some of the air basically got taken out of the S&Ps and the NASDAQ, and that's okay. The Russell just kind of did its thing and just kept trailing down, showed the relative weakness, had the profiles on the daily appear, and we were able to leverage off of those. Even when we had that snapback rally the other day, this still really had shown its hand previously and was a real weak trade that hopefully everyone can take advantage of playing a relative strength game. Where are the numbers on the Russell? Let's take a look at them. Here's the 240 lows. We're hovering right around right now. We're gapping up, obviously, 1048. Let's call it 1049, and we're trading 1048 right now. So, again, this is the leverage point for me. We may go back into this fair option up here, but if we cross back down below these numbers, I'm going to be very willing to continue to short this. Things don't go in straight lines, folks, so make sure you understand what your game plan is. The long-term technical damage, in my opinion, has been done, and we may drift lower, but we may have some decent rallies in the midst of this, and be prepared for those. And if you're trading on a short-term basis, trading against the trend, in my opinion, on the long side, you can use some of this information that we're talking about to possibly pick battles on the long side. But I'm kind of opting out on longs at this stage. Hate to beat a dead horse, but considering what these tell me, I'm basically sitting on the sidelines when it comes to longs now until those numbers change. Whew. So here's the situation on a couple other things. We're going to go to break in about 6 minutes. And when we come back from break, we're having a really smart guy from BitMEX on, Arthur Hayes. I want you guys to stick around. We tried to get that going last week, had a little bit of a couple of technical problems, which were probably my fault. But we're going to have him on, so make sure you stick around. It's a really interesting concept and a really interesting business. And we're going to be using their data on our platform to move forward with because I believe in it so much. So anyway, let's take a look at some of the currencies. Euro. As we dive into this, obviously, last week we talked about picking some battles. This being in obviously a big short trend, a bearish trend, and we talked about picking the battles, waiting until we gravitated back down below the 127.36 area. Okay, we got back down below there. That was a decent short opportunity. And look where the targets we talked about were. The targets were the other side of the box, and that other side of the box was met. Let's just see if we met that 126.04. Reached a low of 126.05. Okay, so we're about to tick off there on meeting some targets. Just gyrating around. Those are the inflection points to pay attention to on the euro, 127.36 and 126.04. So we may bounce around here a little bit. We got to kind of look around. We got to look at the dollar a little bit. We got to look at crude oil. And by the way, there's no events today, which is kind of amazing. There's no economic reports coming out. And as we talk about crude oil and the euro a little bit, I want to state that last week over $4 billion was devoted by the Russian central bank to prop up the ruble still. And while we're talking about that, I want to bring up the ruble and show that there is zero reasons to short this as far as I see it. And when we were talking about this before, I think we were back in here when Eddie and I were looking at this. I want to say we were trading around 38, 39. Had a new box appear, no big deal, used it as actual leverage above this fair auction, this bracketed area, as I like to call them every once in a while, to even move higher. So this allowed you to orient stops, and on the long side, there is zero reasons to go short the ruble right now, even with the central bank in Russia behind trying to temper this thing getting in a much worse state. It's really weird when trades go bad. It seems like everything's going bad around it, and Russia's trying to prop their currency up. At the same time, they pretty much make their living off oil prices, and oil prices are in the tank, and that's just I want to say it's unfortunate, but I really don't care. Japanese yen. We talked last week about some support areas with stops oriented around these support areas, one of them being 107.61. We also talked about maybe even a riper opportunity and a reason to possibly leverage the entire fair auction, in this case on the long-term trade on the yen. Remember, we bought this thing around 101.33, and initially targets were 105.44. That broke out, and then we were looking for support to buy. Well, you've got an accumulation area, in my opinion, we talked about last week, giving this thing maybe a little bit more room than usual, with stops down below 107.07. All right, based on your appetite for risk, I'm still a big fan of going long the yen here. And I don't think this is over yet. So we may, hey, if we go down farther, that's what stops are for. But if we get back in the game here, I'm still a big fan of this going a lot higher. Okay, so again, some of the other things that we usually cover, let's just look at the British pound. This has been a great trade from up around the 165 area recently. Why do I say that? That's because we kissed it to the tick up here. Similar situation with the yen. Pound in a downtrend, goes back up to the other side of the fair auction. That's Custer's last stance on the short side, stops above, and now we're breaking down below. I'm kind of looking at the yen in a very similar fashion. Hopefully, this will hold on the converse side on the yen. But the British pound, you get your inflection points now are 161.39, 162.94 up top. I'm considering this drifting lower, and I don't see any reasons why it won't. And those inflection points are where I'm orienting my stops around. Okay, so as we take a look a little bit farther down the stack, just to get some things out of the way before Arthur comes on later, let's take a look at the 10-year. We always talk about the 10-year. Do not short treasuries. You've got too many things against you, fundamentally speaking, and technically you got some things on your side here too. 125.04, that breakout. We're not looking back, folks. This market is obviously, bouncing 20 points this morning from the lows, and we're gapping up a little bit. But guess what? The 10-year doesn't care. The 10-year sees a central, Fed, whatever you want to call them, behind this thing, and also sees that the U.S. economy and the global economy may have some cracks in the armor right now. And I don't think this thing's, in any type of short realm right now. So that's my 2 cents on the 10-year. Let's take a look at the DAX really quick. Got about 20 seconds here. This is the situation on the DAX. Nothing new. Talked about it being weak relative even to the euro situation. Here's the 240. You do have a nibbling situation here around 88.15. Stops need to be down below, and targets above 89.61 on a concentrate against a long-term trade down. We'll be right back, folks. We'll have Arthur Hayes from BitMEX. I think you'll thoroughly enjoy this conversation.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And we're going to try to get Sam or Arthur on the next break. I'm hearing we have some more technical difficulties getting them on. That's okay. Let's take a look at gold really quick. Everybody wants to always know what gold's doing. We had the 1227. Let me make sure that's correct. The 1227 area, yes, that we've been speaking about. We kind of came up and closed below and poked our head up again, and now we're sitting right down below this morning, and I apologize about that. We can't seem to get a breakout from that fair auction there. So as we look at this, you know, I told you I needed to see a close on gold above that 1227 area, and I just can't seem to get that to happen yet. We may have it happen today, but again, you want to see a close above or below these fair auctions and then have it retest. And looks like we just kind of did a fake out here. Let me just see where this started. Yeah, it started last night for you guys, this afternoon for me on gold. So, yeah, sorry about that. If we're trying to trade breakouts on gold, that you know, the close above and the retest is obviously one of my favorite trades. And that just is not being patient about that. That's not happening. This is the situation on silver, a weaker instrument. Talked about this a couple of days ago. We have met target 1772 and then the unfair lows 1675. I actually expect those to be hit at some point. So again, breakouts above 1772, and while we're in this fair auction here, just churning around, I don't feel like you have a lot of leverage to trade silver until we surpass the top or the bottom on this. So that's where I see the value of trading silver right now. Let's take a look at crude oil. This is something that's just really gotten, you know, I don't have to tell you guys this. So, again, the 9086 area, we talked about that, the close below the retest. Boom, here we go. Now what do we do? Let's take a look at some shorter-term numbers on crude oil. And we're sitting below 85.77. That's the leverage point. If we can get back above there, you might be able to start nibbling on the long side above 85.77. But until then, this is kind of a wait and see. I don't see any leverage down here on the short side either. I'd like to see a new box appear on this to start diving into crude oil again on the short side or the long side, and that's just not happening right now. Okay, take a look at a couple of bellwethers here before we get going on the next break with Arthur or Sam. Let me see. I say we got Arthur now. Okay, let's hope that holds up. All right, Apple pre-market 101.32. 170 unfair highs on the daily. And we're going to sit here and understand by looking at this that Apple is staying strong in a relatively weak market. This is a huge percentage of the NASDAQ and a decent percentage of the S&P 500. So, again, I was really, from the short side, hoping this leader, so to speak, would start coming back down below these inflection points and staying below and showing some weakness to actually give the short trade, based on the market breadth that we look at, a little more oomph. And that is seemingly not happening. So, again, strength in Apple, big part of the marketplace on the NASDAQ. Got to pay attention to that. But, again, I'm sticking with my guns on the 1900 level in the S&Ps. And if I get stopped out, I get stopped out. But, trying to stay short-minded in general on the S&Ps. So that's the story on Apple. That's your area of significance here. Still can't hear us. Okay. Maybe we should call it. Yeah, we'll go with Sam on that, on the Bitcoin stuff. Want to take a look at Facebook. This is something that I've actually traditionally looked at. And finally, we're trading 73.27. We talked about this. We talked about a strong stock in a weak market, and Facebook has come down and met and satisfied weekly long-term inflection points of 72.97, 73. So, again, if you're going to take a stab at Facebook, I told you to maybe possibly wait, be patient, let the market come to you. And now 73.22 pre-market. So we're sitting right above here. But the good news is, if you're going to try to trade the bounce on Facebook and you think the market may rally a little bit this morning, you know where to put the stops below 73. Okay, so as we go to break, we're going to be able to hopefully grab Arthur or Sam from BitMEX and be able to explore a little bit about what that company does, and maybe expose you to the world of Bitcoin derivatives and the role that valuable product plays.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and I'm hearing that we are, again, having some technical issues. Looking at market breadth here, and hey, very, very negative. We're going to see these numbers change around 9 to 9:30. It's 8:35 right now, but the long-term view is a very strong situation when we see negative breadth, and I'm just going to stick with my guns on that. I'm going to go select none here, and I'm going to pull up the NASDAQ 100. And we're going to take a look at a couple of stocks that hung in there that may be able to rise a little quicker than the normal stocks, which are trading below or within profiles. So got the NASDAQ up. Yeah, lo and behold, I've got 1, 2, 3, 4, 5, 6 stocks out of 100 that are actually showing positive profile strength here. Apple was one of them. We already took a look at that. And these were based on the close. These aren't even pre-market. So as you can see, this multi-time frame view, we're definitely both weeklies and dailies. Actually, this is showing pre-market. So again, that's kind of the story on Apple. But let's, we already looked at that. Let's take a look at Costco. This was something we were talking about. Well, actually, we weren't talking about it. I think I was actually using this as an example in some of the videos I was doing this week, and I spent 8 hours doing videos yesterday, by the way. So Costco, let's take a look at Costco, COST. And let's see if there's any ripe opportunities here on Costco. So as we look at this, I like this. I like the way this is looking. 128.90 pre-market. This is the weekly situation as we pull this up. Trading above weekly on for highs 127.78, and that's kind of breakout situation there. And as we look at the market pulling back, this thing kind of showed its hand really well. In the midst of the last couple, 2 or 3 weeks on the market kind of banging around here, this thing was sitting right on the launching pad, in my opinion, to staying within profile. So as we look at this on the weekly, let's just kind of drill down into the daily on Costco. And if you guys want to let me know if we have gotten Sam or Arthur on by any luck of Zeus or whatever you want to call it, just let me know. We'll be more than happy to bring BitMEX on. So this is the daily situation. Obviously, that scanner showed you the opportunity in front of you. 27 days it's been above daily profiles here. 1 week just broke out of a new profile. So, again, these numbers are pretty cool in my opinion. Bed Bath & Beyond. Let's take a look at Bed Bath & Beyond, BBBY. So the inflection points to really pay attention to on Costco, let's just restate those. Stops below 127.78. So let's just look at Bed Bath & Beyond really quick. By the way, Al, I could conference those guys in on my end, and that may be a way around this. Just letting you know, Al. So Bed Bath & Beyond, obviously our scanner was showing we're kind of sitting within profiles here, but last couple of weeks, okay. I hear that Bed Bath & Beyond, the inflection point to pay attention to right now, 65 even. That's where I'm putting stops around trying to trade the bounce. Okay, I hear that we've got Arthur on. Arthur, are you there?
Yes, I'm here.
Wow. It's been a heck of a journey this morning to try to get you on.
Yeah.
How are things in Hong Kong tonight?
Very good. The weather's turned. It's getting a little cooler, so it's not so humid. So it's actually nice to be outside.
That's cool. It is getting cooler around here this time of year. That's not the New England cooler that the people in the States are used to. We're just talking about 5 degrees Celsius, maybe a little bit cooler.
Yeah, exactly, like 75 instead of 85, 90.
Ah, yeah. Okay, well, Arthur Hayes is one of the founders of BitMEX, and a lot of people don't even know what BitMEX does, Arthur. And if you could really, I met you in Hong Kong a couple of weeks ago, and we're going to do some integration with the platform that we have with your information. But if you could just give a kind of a Reader's Digest condensed version of what BitMEX does, why do you feel it's important in the landscape of the Bitcoin environment?
Okay, so I guess to start off, Bitcoin with my own money in May of 2013, and basically I just took some of the derivative arbitrage strategies that I had used when I was a trader at the bank and applied a similar sort of thing to Bitcoin. And I was trading on some of the exchanges at the time, and what I realized is that a lot of the products and the way the exchange were operated wasn't very optimal given what I had used to trading in the traditional financial markets. So in December, I got the idea that it's a good idea for me to create my own exchange and make it more professional to try to mimic something like you'd see on the CME, NYMEX, or any other global derivatives exchange. So I got together with my 2 other co-founders who have a more tech background, and we founded BitMEX, the Bitcoin Mercantile Exchange. And our aim is to be where professional investors trade Bitcoin derivatives. So it's kind of like, we're copying the best practices of what you would see on a normal asset exchange, and we're bringing that to Bitcoin so that we can allow hedge funds, banks, institutional money managers to dip their feet into the Bitcoin waters. And also we want to allow people who need to actually hedge a real currency risk as opposed to just gambling to use our products so that, Bitcoin adoption can grow.
Okay. Well, I think that's a good route to take, in my opinion. When I found out about there's derivatives on Bitcoins, I mean, the first thing that came to my mind, if it's in a professional exchange environment type situation, was, wow, people can now sleep at night that are holding Bitcoins, and that to me, like, who's taking the other side of the coin on that, so to speak? Who's taking the risk? I mean, can you explain a little bit about the just the hedging capabilities of it and the value there, maybe in the market makers involved, and maybe we can talk about where are funds actually held, things like that. That would be maybe interesting for the listeners to know.
Okay, so I divided the ecosystem up into 3 types of users. First, you have your merchants, who have a product, maybe it's denominated in US dollars, euros, or another fiat currency traditionally, they see the value of accepting payment in Bitcoin. So that they start allowing their clients to buy their products in Bitcoin. However, how do they hedge that currency risk in a good manner that's not too expensive? Right now, there's not really a marketplace for people who have real-world hedging needs to go and trade proper derivative contracts. So they're going to be on the short side, selling Bitcoin versus buying a fiat currency sort of risk. Then you have your Bitcoin miners. The Bitcoin miners are basically just a group of people who run the computing software and the hardware that keeps the network running and processes transactions. They receive, for their efforts, transaction fees denominated in Bitcoin and Bitcoin rewards that are released on a fixed schedule. Now, they have to pay their electricity, rent, salaries, all in fiat, and they receive Bitcoin in the future. And because the prices are volatile, their earnings whipsaw, and it's very hard for them to plan, future operations and attract more capital because their actual earnings are so volatile. So the ability to sell Bitcoin versus buy fiat is very attractive for them to, forward hedge and lock in an earnings stream. And then usually on the buy side, you have professional investors and speculators who want to use leverage intelligently to gain exposure to Bitcoin versus other fiat currencies.
Right. When do you plan on really? I mean, what's the status on going live, or how could somebody really kind of start doing business with you and BitMEX in general?
So right now, we're primarily focused on getting our market makers integrated into our platform. So we have a permanent testnet live where our liquidity providers are tweaking their technology so that when day one comes, they're ready to provide ample liquidity. And we have contractual agreements with some very experienced and sophisticated traders to make markets on our initial futures contracts. For the regular trading, we aim to open in late October, early November of this year. So we're putting the final touches on the exchange, integrating all of our market makers. So on day one, we're going to have a very liquid marketplace to exchange Bitcoin versus fiat risk.
Wow, that sounds fantastic. If somebody wanted to get involved with the Bitcoin derivatives like you're providing a way for them to do that, maybe you covered this a little bit before, but how would somebody they would deposit Bitcoins to trade the derivatives against, if they were hedging against Bitcoins? I mean, everything's done in Bitcoins. Am I correct on that?
Correct. So currently we only allow Bitcoin as margin. We're working with some custodians of fiat currency to allow depositing U.S. dollars and other G10 currencies and have derivatives pay out in those. That'll come in the next 3 to 6 months as we integrate some APIs and get that up and running. But initially, yes, you have to have Bitcoin as margin to trade the derivatives, and then your profit and loss will be denominated in Bitcoin.
Well, it's really interesting that you're starting this because, as I look back on the trading experience that I've had since the, late 70s, basically, derivatives and options, or derivatives, I guess, is the class of futures and options. But, as soon as those came into the marketplace, it almost, allowed the marketplace to be a lot more efficient. And the players that were playing the stock and equities and futures games, and treasuries, it allowed them to have peace of mind, develop strategies that they could count on, and not be at the whim of all the massive volatility swings in the markets in general. And that's just really cool that you are stepping in at this stage and providing some sanity to Bitcoin in general. I mean, it's just, that thing's just been all over the place.
Yes, we definitely agree that Bitcoin derivatives are going to help lessen the volatility, especially when traders are able to, just trade the volatility underlying through puts and call options. We aim to put those in place hopefully in the next 3 to 6 months after launch of the futures contracts.
Awesome. Well, Arthur, it's been a pleasure to speak with you again, and I'm sure I will see you soon over in Hong Kong. Thanks for coming on today.
Yep. Thank you very much.
You're welcome. Thanks for coming on. Well, guys, we're going to just kind of get some updates here before we go to the next break, before we come into the last segment. And we're looking at the S&Ps right now. We're hovering right above that number. I always talk about the levels, if you will. 1900, 1901 is what we talked about, rounded off. We're about 1902 right now. But the fact of the matter is you've got to always, if you're going to play these inflection points and have reasons to play them from one side or the other, you got to give yourself a little bit of a noise factor. It's not like you need to set it, a half a point S&P stops around these things. We need to give ourselves a little bit of room, enough room to where your appetite for risk is satisfied. And that being said, at this stage, we've reached a high above this inflection point so far around 1903. The inflection point actually to the tick is around 1900.8, so let's just call it 1901. So again, that's kind of where that's sitting. Again, we're gapping up a little bit this morning from Friday's close, and that may bring in some more sellers. You got to be watching out for that. So that's the situation on the S&Ps. Before we go to break, let's just pull up the NASDAQ. Let's see where we're at with this. Excuse me. Inflection point's a little bit higher on the NASDAQ, 3881.80, 3882, let's just call it. So as when we come back from break, we're going to cover a couple of stocks on the radar screen, and we'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Got about 4 minutes here. And thank you so much, Arthur, from Big Mex coming on. That is something close to my heart, actually. I'm into derivatives, obviously, and Bitcoin scared the mess out of me. And I've always wanted to get involved with them, and now I feel like they've got the vehicle set up there to really actually finally trade Bitcoins, to be honest with you. And there's going to be, as a new market opens, you guys know, I mean, traders chase new trades in Singapore and London and some African exchanges going on now, but when there's an anomaly and there's a new disparity going on possibly, and the marketplace is not efficient yet, that's when opportunities are there. And the market makers, they've got some market makers set up, and BitMEX I think is going to be very professionally run. But there's going to be some trading opportunities there. There's going to be some very wide markets sometimes. There's going to be obviously continued volatility on Bitcoins in general. And, I'm not saying it's going to be a wild, wild west, but, as a trader, you want volatility and you want anomalies going on. And I feel like there may be some good anomalies there. So let's take a look as we go to close. What I did is try to find some things that were happening on the S&P 500, things that were kind of hanging in there. We looked at, obviously, Apple's in the S&P 500, but we looked at the NASDAQ a while ago, and there was only 6 stocks that met the criteria. And as of this morning, we've got some new information, new climbers here. We're looking at daily instruments that are showing some. There's Bed Bath & Beyond above the box, 7 days already, sitting there as a strong stock. Costco, 27 days. We just talked about that. Tell you something else I looked at this weekend. Looked at Big Mo, and I was doing a little research. This Altria, somewhat of a safety play always in times like this. But Big Mo, if you look at this, I mean, how many weeks has this been above profiles? It's insane. And here's the daily situation, and if you're trading Big Mo, you got to use these inflection points because, I mean, they can be your friend. And I hadn't paid attention to this lately, and I was like, my goodness, has this thing just been, on a tear and also on a relative strength basis, just insane. 46.20 is going to be the support area on this, and pre-market we're trading 46.74, it looks like. So, again, you always want to try to buy things on dips. This thing hasn't given you too many, but it also hasn't given you really zero reasons to go short or to get out of the longs. So, again, Big Mo, one of my things that was on the radar screen this weekend. All right, before we get off the show today, let's just kind of revisit a couple of things that we talked about. Gold, we're not even going to pull it up. We're just going to talk about the numbers. 1227, trading 1228 right now. I want to see a close on gold, not just movement on gold, but I want to see a close on gold above 1227. Then I want to see that, consolidate or possibly go back and retest those unfair highs around 1227 for the confirmation that we closed above and the ability to buy the former resistance, now support on gold. Silver, not looking too good. Not a big fan of it. If you've been watching this show, I've kind of just thrown it aside as far as a trading vehicle on the long side. So that's kind of where that is. 10-year, still a big fan of this going north, even though the market's bouncing a little bit this morning. Guys, you've been great. We'll pick it back up again tomorrow. Steve Rhodes is next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.